FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
You are listening to the Financial Survival Network. It's Kerry, Lutz, and markets go up, markets go down. No, they don't keep going up indefinitely. We know that now. We see what's happening. The markets appear to have hit a plateau. Will they go up or continue their ascendancy, or will they behave normally? Well, Nick Santiago, InTheMoneyStocks.com, is with us now. Nick, welcome back.
Great to be back, Kerry. Thank you for having me.
As always. And what is going on here with the markets? Looks like we've hit a major resistance point at the very least, probably a reversal. In my opinion, where do you stack up on this?
Well, this is a 5-year of a decade, which is generally a bullish year. If you go back in time in history and you look back at all the 5 years of any decade since the Dow Jones was established, we've never had a down year in a 5-year of a decade. So the 5th year of any decade has always notoriously been a bullish year and has ended in a bullish year. But as you know, I look at a lot of different cycles, and one cycle that this resembles is the 2005 cycle, and that was the 1 year where the market basically just barely carved out a positive gain by the end of the year. And I think we're following that 10-year cycle pretty closely right now, and that's telling me that 2015 should be filled with volatility. And if you've looked at the VIX or the volatility index lately, you'll see that we've really had quite a lot of volatility in 2015. I think that's going to persist until the end of the year. So if you're a trader, a short-term trader, this is the greatest environment you could ever ask for. If you're a person that is a buy and hold type investor, this is the worst environment you could ask for. So it really depends on your style of trading, and if you know how to trade, you can really thrive in this kind of environment, in this kind of market, and we've done that this year.
So traders, this is where it's at, huh?
If you're a trader, this is all you could ask for, and then some. This has been an incredible, incredible opportunity each and every day because, as you could see, if you just take a look at a chart of the S&P 500, starting from the beginning of January, I mean, this market has been range-bound. I mean, you've gone up in the cash S&P from, say, in January, you were trading, the S&P opened up around 2061. It traded down to around 2000 and went back up to 21 and a quarter and went down to around 2040. Now it's back up to, 21 and a quarter. Now it's starting to pull back again. So, I mean, if you can trade these ranges and you understand the patterns that are made by the institutions, I mean, this is really a market where you can thrive in, and we've done that so far in 2015.
And you think it's going to keep going on this way till the end of the year, huh?
Absolutely. I mean, you now have the Federal Reserve. They've now cut their quantitative easing program down, so they're no longer printing money, but they still have over $4 trillion on the bank's balance sheet. So that money has not been put to work yet. And the banks are still frightened to lend anybody any real capital unless, you have a superb credit and you have collateral and everything else. So, we're seeing, a market that is somewhat handcuffed to the upside. And every time we go low enough, it becomes a buying opportunity. So it's been actually a sensational trading opportunity if you know what you're doing. But like I said before, if you're a buy and hold type investor, this is not the year for you.
Yeah, so none of the tried and true formulas on Wall Street, that's just not going to work for you.
That is not going to work. And, a fair case can be made, and it's very easy, Kerry. You and I both know when the central bank, most importantly the Federal Reserve, is printing money, it's like you said, you could throw a dart at anything and the stock will go up. You don't even have to look at what company it is. But in this kind of environment where they're kind of, they have their hands tied right now because they printed so much money. They know it's at dangerous, unprecedented levels. And what you do get a lot of is you get double speak from the Fed right now. You'll get one Fed governor or one Fed president saying one thing, and an hour later you'll get another one saying something totally different. In fact, yesterday the Federal Reserve had 4 members speaking at 4 different times yesterday, and they all said 4 different type of market moving event quotation. So, one guy saying rates are going up in June, another one saying September, another one saying they can't go up till 2016, and another one saying we have to wait. We don't know what we're doing. So I mean, you're getting all of this 2-sided, 3-sided, 4-sided speak coming out of the Fed, and nobody really knows what's going on. So that's why you have to know how to use the technical charts. You have to know exactly what you're doing out here. And that's the kind of environment, this is the kind of environment you can make money in.
And what about rates here, Nick? I mean, you followed what the Fed is saying. Is there any possible way that they really can raise rates in the foreseeable future?
I don't think they could meaningfully raise rates. I remember, if you remember back in 2002, 2003, when Greenspan lowered the Fed funds rate to 1%, I mean, they were just raising rates a quarter point every meeting. And when we got up to, 4 points, when the rates went up to 4 points on the Fed funds rate, it really spelled trouble for the market. So I don't think that the Fed can do it in any meaningful way, raise rates significantly. Maybe I think in September, or possibly maybe in March or February of next year, they'll raise a quarter, but I think that's all they're going to do. Just think about it. The backdrop is set where you have European quantitative easing, you have Japanese quantitative easing, you have China joining that bandwagon as well. I mean, how can the United States, raise rates, or the Federal Reserve, I should say, raise rates?
Well,
I
what
just
would
don't
that do
see.
to the dollar here, Nick? If they raised rates, even let's say they raised them 50 basis points, half a percentage point, the dollar would go raking 100. So
The dollar's
quickly.
going up anyway. The dollar is going to go higher regardless, simply because of the fact that you now have all these other central banks raising rates. The dollar is not getting stronger because it's a great currency. The dollar is getting stronger by default. So, I mean, it's going up anyway. So you're going to see the Fed right now at best, and I don't even think we'll see any action before September at the earliest. Even if they do it then, it would just be 0.25%, and they would make sure that, hey, we're going to look at this every meeting. And they also want to slow down the stock market from going much higher, because the bubbles that are getting created are going to be massive. So, I mean, you see it in so many different areas right now as far as equities are concerned. So, they're trying to keep the stock market contained without hurting it as well.
And it's an impossible mission, isn't it?
It is. It will be. But they've done a pretty good job of inflating the market. As you have, they've done an incredible job. But the reality of it is, when interest rates, if you ever look back at any point in time since the Federal Reserve was established in 1913, the booms have always taken place with low interest rates. The busts have always taken place whenever interest rates had to go up. And it's just that cut and dry. It's that simple of a formula. This time around, with Ben Bernanke in charge, they went to unprecedented levels where they lowered the Fed funds rate basically 0 to 0%. It's been that way since December 2008. I mean, just think about that. I mean, we're now in 2015, and the banks are still getting free money.
That just bothers me to no end here, Nick. I mean, you and I both understand how this system works, how money is created out of thin air, how the banks just get it for nothing, and then they get to charge interest on it, make interest on money that they got for free. That's just not right.
Well, the way it should work is, first of all, let's just point out it's only 4 banks, right? It's Wells Fargo, Bank of America, Citigroup, and J.P. Morgan Chase. The regionals they got to borrow from the discount window. So It's not quite the same for them, and it's actually unfair to a lot of good banks like PNC and SunTrust and Regions and BBT.
Real
and
banks.
Fifth Third, right?
Those are real banks. They actually take risks and make real loans.
Exactly. So it's really unfair to them that these mega banks that are too big to fail. So when people talk about welfare, and I'm not a fan of welfare by any means, but the large banks are the biggest welfare recipients of them all. So, I mean, that's the bottom line.
It's just something that's so inherently corrupt and corrupting, continues to corrupt, right? Because they can just buy their way by anybody, literally.
Well,
They came and they dropped $100 million on your desk. It'd be hard for you to say no to anything they wanted as well, right?
This is the system that we live in. You know, I think it's becoming a little bit more eye-opening these days to people. But I mean, you need to understand how the system works. And if you go to, I was just thinking about this the other day. If you just go to any corner in the United States, any city, and you ask them, "Do you know how the financial system in the United States works?" I can almost bet that if you ask 10 people, you're going to get 10 wrong answers.
Oh, they're clueless. They're clueless.
Yeah. So, I mean, that's what, society is about. So everybody wants to just, turn on their latest electronic device and put on their headphones and, just go about their merry way. But if you know about this, I mean, you can profit off this and you can make money off this and you can live a good life. And I always tell people, learn to take over your own financial planning, take over your own finances, learn how the system is run. Because I could bet you if you talk to 10 financial planners, they wouldn't even be able to have a conversation like we're having right now.
No, I've been studying this for years and years, way back going to college when I learned about Austrian economics and fractional reserve banking. Just it's destined to fail because when you do have the bust, then your reserve is going to get eaten away by bad loans, and who's going to save you? You made a deal with the devil.
That's right. If you don't have that money constantly coming in, I mean, you're lending out 9 for every 1 you take in, so it just doesn't make sense when you do get a bank run or something of that nature. Hence 2008, you do get the panic. So, it's just a boom and bust cycle right now. We're in probably, the middle of the boom, but you could see that you're starting to get a lot of fear out here and some more negative tailwinds. But ultimately, the business cycle is still up, and that's the one thing that people need to remember, especially traders. I mean, a lot of traders know this, and they'll take advantage of markets that fall, and as long as stocks are still in play, as long as there's tons of liquidity in play. And that's the one thing I think everybody needs to remember right now, whether you're bullish or you're bearish, is that there is a lot of liquidity in the system. You have European QE going on. They're buying 60 billion euros worth of bonds a month. You have Japan printing 3 times the amount of money that the Federal Reserve printed at its peak. And then you have 0% interest rates in the United States. And now you have People's Bank of China, which is the Chinese central bank. They're also doing some type of quantitative easing at this point in time. So it's an incredible amount of liquidity that is flooding the system. So there is not a liquidity crunch out here right now. When there is, and at some point there will be again, that's when you'll see real panic.
Yeah, and it's inevitable that you will see it again.
Oh, it doesn't. The cycle doesn't break; it just continues.
Yeah, the madness continues on, and so it's better to profit from it than to be a victim of it. And
absolutely,
precious metals. What's going on here?
I mean,
what are we going to see?
Kerry, I've loved gold, and I still think it's the ultimate insurance policy. Silver as well. Right now, you're having a really, really good day in the precious metals market. Gold futures are up about $7. But what's happening now is that when I look at the charts, and that's what I go off of to gauge where gold is going to go. Last time I think we spoke, we talked about gold futures making their move, and I had said there on your show at the last time, I said, well, we've just about peaked out now at 1,300 an ounce, and we should start to get a pullback, and it should lead to another buying opportunity. So it's about a wait-and-see event on the charts right now. If the charts can make a lower high, meaning they do not exceed or break the March lows, that's going to be very, very bullish for gold in 2015. But right now, the chart is more neutral than anything. But it is still the ultimate safe haven if you do own gold, and if you can't afford gold, buy silver.
Yeah, And you could buy both too.
You could buy both, absolutely.
Hedge your bets.
Hedge your bets. I mean, you're not going to go wrong with either one. The one way to look at it is a lot of people call silver the poor man's gold, but it has many, many industrial uses, and that's always a little bit of a saving grace as well. So if the precious metals are driven down for whatever reason, remember, there's going to be silver demand. Silver is used in almost every electronic device on the planet.
Hey, and what we're going to see shortly with expanded use of solar panels and such, only going to increase, and you're only going to see silver consumption go up for sure.
Well, it's already in almost every cell phone. I mean, there's just so many different uses for silver, and there could be the same use for gold. It's just too expensive to mine. So, silver is the preferred industrial metal at this point in time.
Yep, we know that. That's for certain. Absolutely. So, Nick, tell us how we subscribe to your service, all that good stuff.
Yeah, I mean, traders or just investors, you could just come on over to inthemoneystocks.com. I mean, we put out a ton of free content every day right on our Rant and Rave blog. There's plenty of things and plenty of articles for traders to read and look at, and we shoot tons of videos. We put out tons and tons of free content. Also, we are having a methodology trading course is going to be given out on the 16th. So traders can come on over and sign up for that. They'll learn all of my trading techniques, everything that I do. Pretty much, it's about an 8-hour boot camp, but we will cover everything from time and cycles and patterns and how you can project where stocks are going to go and where they're going to fall. We also started, Kerry, recently in 2015 our option service, and it's just been a blockbuster service. Believe it or not, we're around 2,000% gain for the year, and it's
really?
It's incredible. And traders that don't have large capital can come over, and you don't have to. All we simply do is we buy puts or we buy calls when we think there's going to be a move in a particular equity. And just recently I closed out several positions. One was for 166%. Another one was for 75%. Those are just two positions that I closed out within the last few days. So it's been an absolute blockbuster service. It's probably the fastest growing service that we've had have ever started. So again, it's just something for people that just don't have a ton of capital that want to get involved in the market. You take a small position in an option. And again, we just keep it very, very simple. We're either going to buy a call or a put when we believe there's going to be a big move in an equity. And one of our last trades was Yelp. We had puts on Yelp. Stock came out with earnings, and we banked 166% in just 3 days.
Wow, that's pretty impressive. Those are numbers that turn my head.
Yeah, I mean, and you don't have to be involved in a big way to come in and take a couple of. You buy a couple contracts to see what it's all about. We always recommend that traders start really small and they test the waters first. Don't take my word for anything. Come on over, try it out, and you see what it's all about yourself.
Pretty cool. Hey, so inthemoneystocks.com, that's the site?
Inthemoneystocks.com. And we're here. You could always call the office if you have any questions. And, we always have somebody on staff ready to answer all of your questions. And, like I always tell everybody, Kerry, take advantage and learn how to understand the financial world and take control of your own portfolio. I mean, that's really where it's at these days.
I couldn't agree more, because you got people out there who have given new meaning to the word conflict of interest. Let's face it. I mean, the scams going on out there now. Don't even get me started.
It's absolutely. Well, you know better than anybody. It's absolutely amazing. What is going on out there, even the whole structure of the financial market. So, I mean,
it's countenanced and really just supported by the powers that be.
Look at when you buy a mutual fund, you get hit with a 12B1 fee. I mean, that's enough right there. So, take control of your own finances. It's not that difficult, and it just amazes me that the world finds it so difficult to do. And after something that happened in 2008, I just can't believe that people just don't want to know what's happening with their money and what to do with their money going forward. So, that's what still amazes me each and every day.
Nick, thanks for coming on. You are really one of the pros out there, one of the people that I really look up to. We've been talking for years now, and I've watched your performance and your integrity, not to mention the fact you're a New Yorker as well. And hey, as always, thanks for coming on, and we will talk with you again soon. Be well, my
Kerry,
friend.
thank you so much for having me, and hope to speak to you soon.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.